The most overbought stocks on the S&P 500. We go to what is an overbought stock? Well, basically, we're basing ourselves in the RSI, the Relative Strength Index, which is a momentum indicator that measures the speed and size of recent price changes to gauge whether a stock is overbought or on the result. RSI ranges from 0 to 100. Above 70, it indicates an overbought levels, and below 30 indicates oversold levels, too much selling pressure or too much buying pressure. And the next one, we're also going to see some stocks that are overcrowded stocks right now, depending on the amount on their float. And crowded stocks are those where a large percentage of the float is owned by big players or institutions. This concentrated ownership can lead to maybe some higher volatility. Fewer shares available for trading means prices can swing sharply, and also big risks. If major holders sell at once, the stock can drop fast due to limited liquidity. And going next, I think it was interesting to see right now on the S&P 500, there are 70 stocks that are actually overbought, but the top 10 are these ones, starting with Axon. If you see the stock right now is trading at a 1-day time frame, RSI of 84.7. You got Blackstone, RSI of 82.9. Oniok, never heard of it, 82.6, just like Data Trader says. A lot of S&P 500 stocks that we don't know, or at least me also haven't heard of.
Yeah.
Target Resources, 82.2. Netflix, 81.9. Definitely my two favorite heroes are Axon and Netflix. Traded a little bit of Axon after their earnings. And Netflix hitting $900 mark. Live Nation, RSI of 82. Surprised after they got the scandal of some problems in the US with Ticketmaster as well.
Yeah.
Disney, 81.6. Williams Companies, 81. Kinder Morgan of 80.4. And Assurant of 80. I think it's worth to look into stocks that at least out of these 10, 4, Lyft, Disney, Axon, and Netflix are definitely catching my attention. And if you look into the next graph, you're going to see them on daily time frame. On the left side, Axon, look at that RSI of 84.7. Huge jump, huge gap it left of around 480. Many stocks are overextended, maybe with a Trump trade related. We talked about Tesla, DAT a little bit as well. MicroStrategy, Axon is one of them. Just like Persian stocks like Geo. But on Netflix as well, Netflix, I'm definitely going to be trading this next week. I don't know how further can it actually go Netflix, but seems like it found today a little bit of a rejection around 900. These are the stocks that are already traded Axon. Not too much liquidity there. Definitely Netflix, yes. I like it. I think it's, me personally, my opinion, overextended. I'm just playing it a little to the downside. If it closes today above the 900, I'm going to see how it actually works next week. But I'm eyeing on shorting it next week below 900.
Yeah, I agree. I think 900 is an interesting point. I think it's also very much a psychological boundary there. I'm going to be very interested to see kind of how they react and kind of some of these improvements they have going to the Christmas time where they have live streams for NFL. I think that's going to be really kind of the telling point for this live stream business. I think, Wall Street was a little bit, I think, looking a little bit more toward the Mike Tyson Jake Paul fight in the sense of kind of active viewers. I think a little bit of those bugs and kind of buffering that can be worked out. But I think if that repeats for the Christmas time fights, or not fights, football games, that's definitely going to be a huge issue for them. And we should see a dramatic drop, in my opinion. But I also agree. I think 900 is kind of a psychological barrier there. We'll see kind of what happens for sure.
Yep. Most crowded stocks. This is a report from Morgan Stanley that came out the end of third quarter. They went through the 13 filings and saw that top stocks are actually most owned based on the percentage of float owned. And Morgan Stanley analyzed Russell 1000 stocks with high hedge funds ownership based on the 13 filings. What happens with crowded stocks? Well, crowded stocks have some risk of overvaluation and can struggle to attract new investors. Right now, I think it's a way to maybe be wary of these stocks with very high RSI on a daily time frame, and also crowded stocks if you own one. Avis Budget Car, 52% owned. I was surprised with this one. Lower Holdings, Howard Hughes, Janus Anderson, Wendy's. Some interesting names, but definitely not very popular ones, at least trading it. Insight, Exelixis, New York Times, Wingstop, and Ultragenics Pharmaceuticals. think just a few names that are actually maybe investors know about, maybe Avis, New York Times, Wingstop, and Wendy's. This is toward for investors that maybe go a little bit more long term. You might
Yeah.
take it as a double sword. No, if it's so heavily owned, maybe it's a good sign. But if you want to get into any of these stocks right now, might actually be not the best moment
Yeah.
think.
There we go for the market close.
And also, well, I have the most overbought assets on the 200-day simple moving average. These are worldwide related to the top 6 assets. Well, why the 200-day moving average? Well, because it's one of the most popular benchmarks for trading. Being significantly above its 200-day moving average might signal strong momentum, but also a potential pullback. When an asset is above its 200-day moving average, it suggests overbought conditions, and you might expect a mean reversion. Prices often revert to their averages over time, especially that 200-day moving average, because it's a very sought after one. And the assets are actually on the next slide. So U.S. equity SPY up currently 11.5% from its 200-day moving average. This is why they might expect so low return next year. Banks, gold trading 7% above its 200-day moving average. Asia Pacific, excluding Japan, EPP, that's a ticker, up 6% from its 200-day moving average. Also, high yield bonds at 3.8% from its 200-day moving average. Yesterday, I put a trade idea on the bot trader community about a possible going long on treasuries, on bonds. And
Okay.
you see it here with the yields being up so much. Emerging markets, fifth one, being up 2.5% above its 200-day moving average. And the US dollar as well, got into it, was also around 2% above its 200-day moving average. It's had a really nice run lately after Trump got elected. But yeah, these are the top 6 assets trading above that are somehow popular and might as well be paying attention to a possible short trade. You know me, I'm a little bit more inclined to taking short.
Yeah, you're short over here for sure. So I like it. I like it. I don't know about U.S. equities. I mean, I think we'll have to see a pullback soon. I don't know when that would be, but thanks for the lookout on that. I think definitely going to be kind of reducing some risk on some of the U.S. equities for sure. Um, Gold is really interesting to see, especially I know a lot of people who are kind of more bullish on gold, but 7% above the 200 moving average is also quite overextended there. But Luis, thanks so much for kind of the segment. I really enjoyed that.